Good morning, nieces and nephews. Your Uncle Chad is screwed up. I really screwed up this past Monday. It was a holiday. Uncle Charles, for some reason, I thought the market was closed. I ended up taking my family out of state to go on a nice family trip, thinking, it was my kids' school day off from school, my wife's off from work. I'm thinking the market was closed. And then I'm getting a bunch of messages from my Discord members. And then I realized, holy crap, it is not closed. The market was open. So I just want to apologize to everybody. Apologize to all my Discord members if you guys wondering why did not anyone heard from me yesterday. Well, I honestly made a mistake. I went and did family time when I should have been doing work time. I screwed up. But hey, we're gonna move forward from here, and we're gonna make the next 4 days count, okay? And to all my YouTube subscribers, sorry I haven't been making content. I was going to make it the morning, a pre-market analysis, which I'm doing now. But I honestly I thought Monday there was no trading day. The holidays threw me off. Anyways, so I'm gonna relook at all the holidays that the stock market is open on and when they close on, just so I make sure I get it right in the future, okay? Okay, so but anyways, let's get straight to the charts here. Look like SPY went to another new all-time high once again. But this time we closed way above the Bollinger Band, okay? As I can officially say, based on the Bollinger Band, that SPY is overextended to the upside. We gotta be careful here because this is when a lot of retail bears might step up and say, hey, it's time for pullback time, okay? Remember, the market doesn't always have to correct pulling back. It's nice when it does that because it's tradable. But sometimes it does the whack thing and correct through time by chopping sideways. Not a fan of that. I prefer healthy pullbacks because they're tradable over those sideways consolidation. Okay, just keep that in mind. Even though we're overextended, we're hitting critical resistance levels, we're at all-time highs, new all-time highs. Don't just assume we're gonna pull back and short around here. We gotta wait for the right setup. I do have fib levels that from previous all-time high from July 2024 high down to August 5th low. That's the orange line. So some projected fib levels that we have up top. We have one here at 586. Okay, we have another fib level at 589 based on the shorter term one. Okay, these are levels, these are targets that I'd be watching. Okay, 585 clears, 586.2 would be a target. Okay, and then possibly above that we can go hit 587.5 and 589. 591 and 592.6 will be the targets above if SPY wants to keep going despite it being overextended. If SPY wants to keep going, like I said, it'll need to clear 585, 586.2, 587.5 and 589, and we can go hit those higher levels. Okay, now the last critical level that SPY cleared was 583.6. Okay, it was a fib level. So if SPY can stay above it, guys, guess what? It's possible we're gonna keep on going higher. No matter how much it doesn't make sense, possible we keep on going higher. But it gotta stay above 583.6. If we break it down, that could be a sign that it's pullback time. Okay? If we break down 583.6, next target would be 582, 579.5 and 578. All right, we can go head back down lower. Look what happened when we cleared 575 last Friday. It definitely led to more upside. So if we are to be bearish, the price action behavior must change by breaking down those support levels that I mentioned. 583.6 is the start, 582, 579.5 and 578. Okay, especially 578. Let's move on to triple Q here. Now, unlike SPY, triple Q is not at new all-time highs, but it is flirting with that 500 level. Have a 497 level. As long as above 498.5, and the big 500 would be in play. Above 500 is 502 and 503.4. If it's pullback time, then 497 and 495 needs to break down. And that will put the lower targets in play down to 492.6, 491, 489, and 487. All right. NVDA continues to go up. The last critical level it cleared was 138 and 136.5. So those levels must fail as support to invalidate the breakout, to put 135, 133, and 130 or lower in play. If we stay above 138 and we clear 140, guess what? We're heading up higher. 142 plus in play. Tesla had the big gap down last week. Monday, it decided to consolidate. It did the same thing Uncle did. We was consolidating. But what's it going to do? Upside or downside? Well, I got the range, 223.5 down to 216. That is the new chop range. 216 to 223.5 as of right now. If it's to be bullish, then 219, 222, and 223.5 must clear. If those levels clear, then more upside is possible, especially above 223.5. That will put 226.5 and 230 in play. If the consolidation is going to lead to the downside, then 217.5 and 216 must fail as support. If those levels fail, then more downside is possible. All the way down to 209.5 or lower would definitely be a possibility. And here is IWM. Recently broke out the flag. It was flagging. Broke it out on Friday. Showed some follow through on Monday. Okay. I'm going to stay bullish on IWM as long as above 221.8, 223, 224.5, 226, and 228 are all targets as long as above 221.8. I can't favor a pullback unless 221.8 and 219.7 fail as support. If those levels fail, 218, 216.4, and 215 or lower would definitely be in play. All right. So thank you guys so much. I'm so sorry for the yesterday's mix up, but we back at it. Price action, sheep style, baby. I'll make another video later today. It's going to include all the dark pool levels and the option flow. So make sure you guys come back for that. Please hit the subscribe button. Please turn on the notification bell. And good luck today. Peace.